Hello, this is Rick Cortez with the July 2025 update on the Westwood Broadmark Tactical Growth Strategy. So let me update you on where the four pillars of our investment process are now. Number one is equity valuations. They're negative. As the market has gone to new high, equity valuations have risen, and we're now in the top quintile historically. Number two is investor sentiment. And investor sentiment is getting increasingly speculative. In a way, we are a little bit surprised that it hasn't gotten more speculative more quickly. As Adrian Helfert, my partner, pointed out, off the April 8th bottom, the market went up 20% in 2 months. This has happened only 6 times in 60 years. But right now, investor sentiment is turning negative. Number three is monetary policy and credit conditions. And here things are improving. Interest rates are stable, credit spreads are narrow, and most people expect the Fed to cut interest rates at least once or twice by the end of the year. Now, it matters greatly as to why the Fed cuts rates. If they cut in a declining economy, that is a very dangerous time for common stocks. However, if they cut and the economy is chugging along, that would be very bullish. Which will it be? Right now, our models are bullish. We believe a canary in the coal mine will be credit spreads. They will tell us how the economy is doing and if there are problems. Right now, there are no problems. And finally, number four is momentum. Momentum is positive. Upside volume is above downside volume, and breadth is positive, although we're seeing some divergences, which I'll get to in a second. So we maintain a 37.5% long position in the market. We've added more technology recently, and we've also added a position in gold. It would be remiss of me as a risk manager not to tell you 3 things that make us cautious about the second half of the year. Number one, the May to August period is the weakest period historically of the year. Number two, investor sentiment is getting more speculative. And number three, we're seeing some divergences between breadth and price action. For instance, in the first 6 months of the year, all of the major market averages were up, with the exception of small caps. Small caps were down in the first half of the year. Again, we don't predict, we adapt to changing market environments. Our goal is to provide a positive absolute rate of return for our clients every year. We have done this in 19 of the last 23 years without a drawdown of more than 10%. And to do this, we must be willing to give up a bit of the upside in order to do well when those down markets come. So this is Rick Cortez. Thanks for joining me. Please join me in August for the next update. Thank you.